Welcome. In this video, Zbcn coin fall may be over, pump coming. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When the chart is carefully examined, it is possible to observe that the price movement is at a highly critical and potentially promising stage. Especially when past price behavior is analyzed, it becomes evident that the market has made an upward move and formed a significant high. This high also represents a major resistance zone for market participants. The formation of this level clearly demonstrates the market's upward potential, and now attention has shifted to the formation of a higher low, which would support this peak. In technical analysis, one of the fundamental conditions for establishing an uptrend is for the price to form a significant high, followed by a higher low that supports this high. The current price action fits precisely into such a scenario. That is, after forming a recent high, the price has entered a natural pullback phase. And if the low formed during this retracement remains above the previous low, then a formal uptrend will have begun in the market. This structure, known in technical analysis as a higher high, higher low formation, is considered one of the foundational elements of a healthy and sustainable uptrend. If this structure forms, the market direction would officially turn upward, presenting new buying opportunities for investors. At present, the area where the price is trading can be considered a potential bottom zone. This is because, after a certain pullback, the price has begun to move sideways and seems to struggle to go lower. Such horizontal movements typically indicate that buyers are starting to re-enter the market and that selling pressure is diminishing. A potential upward reaction from this area would suggest increased buying interest and signal that investors expect the price to rise from these levels. If this occurs, the current bottom will be considered a higher low, and an official uptrend can be identified on the chart. The formation of a higher low does not merely indicate a short-term reaction. On the contrary, its significance in technical analysis is quite substantial. This type of structure often signals not just a minor bounce, but the beginning of a long-term trend. Therefore, if the price reacts upward from the current region, it could signify not only a short-term profit opportunity, but also the birth of a new trend. This, in turn, may prompt investors to update their strategies and restructure their positions. Opportunities like this are rare and valuable in technical analysis, because market movements typically do not occur randomly. They form around specific structures, and identifying these structures can reveal potential profit opportunities. In the current situation, the price may be in the final phase of ending its previous decline. During this process, if the price begins to move sideways or holds at specific support levels, it may indicate that the downward momentum is fading. At the same time, this sideways action may also represent an accumulation phase, meaning that investors could be waiting to enter positions at these levels. A sudden wave of buying after this accumulation phase could lead to upward price movement and the start of a new uptrend. Therefore, the current situation should be monitored closely. If the price indeed forms a bottom in this region and breaks upward, it would paint a highly positive picture for investors. This breakout would increase confidence in the market both technically and psychologically. That confidence would trigger new buying activity, potentially leading the price to retest or even surpass its previous high. This, in turn, could set the stage for targeting new peaks in the market. But we cannot rely on this analysis alone. Let's take a look at the other metrics as well. Stay tuned. When the chart is carefully examined, it becomes clear that the price movements are displaying a structure that aligns quite well with Elliott wave theory. At the moment, the price appears to be within the second corrective wave according to this theory, and seems to be approaching the potential termination zone of this wave. In Elliott theory, the second wave typically retraces a portion of the first wave's gains. This is a correction phase, and it is normal for the correction to reach certain retracement ratios. Fibonacci retracement levels play a critical role at this point, as they reflect the psychological structure of the market and the regions where participants tend to react. Specifically, the 0,618 and 0,786 levels are known as important reversal zones in the world of technical analysis. This is precisely why the price currently reaching the area between the 0,618 and 0,786 Fibonacci levels is a highly noteworthy situation. These levels are generally considered a buying opportunity zone by investors, because the likelihood of the price reversing from this area and initiating the third wave is quite high. The third wave is known to be the strongest and often the longest-lasting wave in Elliott wave theory. For this reason, the structure currently seen on the chart is a significant technical development that investors should carefully monitor and evaluate. If the current price level not only aligns with Fibonacci ratios, but also coincides with previous support resistance zones, the probability of a reversal increases even further. This is because regions where both Fibonacci levels and horizontal support zones overlap are often strongly defended by the market. These are the levels where major buyers tend to step in and steer the market. The fact that the price is currently in such an area presents a highly positive technical outlook. Additionally, when reviewing volume data during the current price movement, signs can be observed that the downward move is losing momentum and selling pressure is starting to decline. A drop in volume accompanying a falling price typically indicates exhausted selling. In such scenarios, the likelihood of an upward reaction increases even further. If volume begins to rise at these levels, it would be another confirmation that the market is about to reverse. Volume is one of the most widely used confirming tools in technical analysis alongside price. Decreasing volume during a decline indicates a possible reversal, while increasing volume during a rise signals a strong rally. At this stage, the clearest signal that the second wave has ended would be a decisive upward breakout in price. This breakout is typically confirmed when the price moves above the descending trend line formed during the second wave. If such a move occurs, investors generally interpret it as the start of the third wave and quickly re-enter the market, which leads to a strong upward move in price. Due to its nature, the third wave is typically the longest and most high-volume wave, so a move starting from this region can technically reach much higher levels. At this point, it can be assumed that the price is forming a base at these levels, similar to previous corrections, and that buyers are starting to step back in. This situation is promising not only for short-term investors but also for medium and long-term investors. According to Elliott wave theory, the third wave is not merely a short-term reaction. It usually marks the beginning of a new uptrend. A reversal occurring specifically between the 0,618 and 0,786 Fibonacci levels often indicates that a healthy correction has been completed and that the market is regaining upward momentum. Historically, reactions from these levels have often marked the starting points of strong and sustained trends across many financial instruments. RSI is one of the most commonly used oscillators for analyzing market momentum, and it is frequently evaluated by investors to determine whether a price is in overbought or oversold territory. Especially when used in conjunction with trendlines, RSI not only measures momentum but also provides early signals of potential trend breakouts. Currently, the descending trend line that is formed on the RSI indicator points to a highly noteworthy structure in this context. The RSI has touched this trend line multiple times but has struggled to break above it. These touches appear to have established a certain psychological resistance level in the market. However, upon closer inspection, it seems that the RSI is now very close to this trend line, and the idea that a breakout might be imminent is gaining strength. If the RSI manages to break above this descending trend line, it is considered a significant technical development. Such a breakout indicates that momentum on the RSI is shifting direction, meaning selling pressure may be giving way to buying interest. This situation often sets the stage for upward moves in the price chart as well. After a breakout in the RSI, it is highly likely that prices will react similarly and gain upward momentum. This is because RSI is known as an indicator that often produces signals ahead of price movements. Therefore, trendline breakouts on the RSI are critically important for investors trying to anticipate price action. We can watch for a potential breakout of this RSI trend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.